This video will increase your win rate. A lot of traders take unnecessary stop losses in the market because they fail to understand efficient and inefficient price action. It doesn't matter the strategy you're trading, it doesn't matter your model. If you're trading an inefficient market condition, you are going to be taking stop losses, right? And you might not even know why you're taking such losses, right? So I brought this video your way just to help you solve that problem. So if you watch this video to the end, you're going to have, and you practice what I preach in this video, you're going to have an increased win rate and you're going to come back to this channel to thank me, all right? So without further ado, let's dive into the video, right? So what is price action? Price action is more like, every activity you see price doing here in respect to time, right? And price action, all of these things you see price do is the bedrock of technical analysis, right? So you can imagine if you don't understand price action and you want to, be a technical analyst, you're always going to lose to the market, right? So that's why you need to pay attention to this video. Now, this is one thing that price does. Price always seek to trade from the efficient area, right? It seeks to trade from the efficient area and it seeks to balance the inefficient area, right? So first I'm going to explain the efficient area and then I'll explain the inefficiency as well, right? So let's say we have a breakup structure this way to the upside, right? Now, after this breakup structure, we are going to have this zone. This is our higher low, right? This is our higher low. And here, that was taken out was our previous higher high, right? So now between this higher high and this higher low, between this previous higher high and this higher low is our demand zone, right? And so price, it means price can retrace and react from an order block here, maybe a breakout block here, or maybe an order block here, right? But anywhere within this zone, right, within this zone here is a legitimate place for price to react from, right? And any element of price here can be respected by price that would, make price to take, either react from here to the upside, react from here to go up, react from here all the way up, right? So, guys, if you like videos like this that help you increase your win rate and to help improve your trading game, please go ahead and click on the subscribe button and also click on the like button so you'll always be notified whenever I bring premium informations like this your way that can help you become a better and a profitable trader, all right? So thank you for subscribing and thank you for liking this video. So what am I saying? So what are we anticipating? That price is going to come down within this zone here, right? To take more orders, right? And then move to the other side. Now, why do price always have to come back? Number one, to take orders, right? And number two, to pay respect as a way of also, acknowledging the presence of the sellers, right, in this market. Now, if price just keeps buying, like in this scenario, let me take this out. In a scenario like this, where price keep buying this way, right? This is an inefficient price action. This is a very inefficient market. And this type of market, sellers are not encouraged, right, to participate in this market. Why? Because price just keeps moving, without much retracement, right? So sellers will not be encouraged to actually partake in this type of market. Now, the only thing you actually see here is when people take profit and then there'll be little correlation and price will just keep moving up. But people would not just want to, sell this market. The only correction, like I said, you see here is when people take profit at this point, right? And then price will retrace a bit. So if you come across a market like this, you wouldn't want to be trading this type of market because all of these things you be seeing here are all inducement, right? So what will price do? Price always seek to correct inefficiency, right? So price will come down and take out all of these things before another leg up, right? So when you have the market moving this way, It doesn't matter if you have your strategy, if market is showing you your strategy within this zone, you're not going to take that trade, right? Because that's also a setup. That's also a manipulation to make you an inducement, right? That's an inducement. That's to make you a liquidity. Sorry, that's to make you a liquidity in the market. So whatever price show you within all of this zone, right? Do not pay attention to it. Just look for another pair that has a balanced or an efficient market. Sorry about that, an efficient market, right? Just like this, right? Price moving this way, right? So now one way you can actually use your now, so let's say you actually want to take a trade, right, within an efficient market, right? You can use Fibonacci tool, right? Use your Fibonacci tool to mark from the previous high that was broken, right, to your lower low, right, this way, right? And when this happens, you can, pick a trade within this zone. So let me just quickly show you guys my Fibonacci 2 configurations for some of you that are interested, so that I also show you guys how to use it properly as well before the end of this video. So if you like my configuration or you want to use how you want to trade like me, you can just go ahead and, select your configuration, right? Your configuration. What you do is this is the Fibonacci tool, right? This is how you do it. You just drag it on your chart and then you click on it. When you click on it, you're going to see the settings icon. Click on the settings icon and then uncheck all these boxes. Just leave only number 1, number 0, and 0.5, right? And then you can select any color you want. Me, I just want, ash and green, right? So that's that for that. So what are we going to do next? We're going to check out our, okay, now let me say this quickly as well. Now, in an inefficient market, right? Let's say you have price moving this way, you have price moving this way inefficiently, right? And then let's say you get something like this, right? You get price come into this zone like this, and then it moves up, right? And then this happens. Now, if this happens, you can actually trade the market, but then it will not be a high probability trade, right? It will be a mid probability trade. But taking this type of trade, taking a trade within this zone is low probability, right? Now, taking a trade with this type of market here is mid probability. Why did I say mid probability? Because price has actually come to this zone, right? Price has come to the demand zone for this particular swing structure, right? So you see that price has taken enough liquidity from this demand zone here as well, which could last price, to keep moving on like that, right? Until price get exhausted, right? So that means price might not necessarily visit this zone. Or, well, of course, it's going to come back later, but for the time being, for the next maybe 1 or 2 swing structures that will be formed, price might actually give you a good take profit, right? But eventually, price will come and what? Take out all of these, take out all of these liquidities, right? Because price is all about liquidity. Price move from one point to the other in search of liquidity, right? So it's always going to come back to take that liquidity. So I just wanted to just make that clear for you guys so that whenever you see an inefficient market and then you see price try to, grab demand zone or maybe in a downtrend, the supply zone, just like this, then you can decide to look for a trade within the zone and, execute, right? So let's go to chart examples so we can, see what we are talking about. Okay, look at this, right? Okay, let me try to call price. Let me try to call price and see, right? Let me try to call price and see. So this is so if you agree with me, yeah, this is our high, right? Let's say this is our high and this is our low, right? This is our lower low. This is our lower low, right? So what are we anticipating? Our price will go and take out this high and price should retrace within this zone, right? And price should retrace within this zone. And you can see now within this zone, what are the elements of price that we've seen here? You can see this is a big imbalance here, right? This is a big imbalance here. This is a big imbalance here, a very strong rejection. So we expect price at least to come and fill some of these imbalances before another push to the upside, right? So this imbalance is always going to drag price down to this zone. So let's play price and see how this thing formed, right? Okay, that's it. Okay, price has tapped into the imbalance. Okay, just look at that. Just look at that. Just look at that. And boom, right? Now we have a new swing structure. You can see how price came and feel the imbalance, right? See how price came and feel the imbalance. So if we actually wanted to take a trade from this zone, we would have used 50%. Now, whenever you have a long rejection like this, right? Price is always going to try to fill at least 50% of the imbalance, right? So, and let's say in an efficient market, right? And you want to actually pick a trade from this zone. In an efficient market, you're just going to, pick your trade, use your lower low, your higher low here as your stop loss, right? Below your higher low, and then you target the high that was created, right? So this would have given us a very, very good trade, right? Trading this model, right? This would have given us a very, very good trade. So let me take this out now, and then let's play price to see more. So, okay, now let's wait now. Now, so that means we have a new swing, we have a new structure here. We have a new swing structure here, right? So this is it. This is our new high, right? And then this is our low. This is our low. Where's the lowest low here? This is it. So this is now our higher low. This is now our higher low. And this is our higher high. And this is our higher low. Now, so what do we expect? We expect price to this is our previous high, sorry. So now our demand zone now is between this our previous higher high and our new lower low, right? So we expect price to come into this zone and then move to the upside, right? So you can see what price did. And price did come to that zone. And you see that, right? Price came to the zone. Price came to the zone, right? Price came and, grab some imbalances here, right? Now, these imbalances you see here are also the price corrected some imbalances here, right? Before moving to the upside. So this is actually an efficient market, right? But then something happened here. Just look at this, something happened here. This was taken and then price failed to, come back to price decided to become arrogant here or rude here, failing to come back to this zone. And that means this zone now needs correction from price, right? That means price is going to find a way to come into this zone to correct this price before eventually moving to the upside, right? So let's watch and see what price will do. So that means all of these lows you'll see, let me pause this thing. So you see, okay, you see that, you see what I'm talking about, right? So you see from an efficient market. So we started from an efficient market all the way up here until we got to this zone where price, failed to reverse into, after the break of structure here, price failed to reverse into this, our demand zone, right? And then price started creating series of highs, right? You see the highs are series of highs, right? Price created this high here. Let me do this. Price, sorry, not highs, lows. Sorry, this low here failed to come back to our demand zone. See this kind of structure that price are creating, right? So that makes it an inefficient market, right? So that means this zone is void. That means this particular zone here needs correction, right? This demand zone here needs correction, right? And look at what price did because it's an inducement. Look at what price did. Price eventually came back and took it. So when I took this particular trade, I showed you guys here, this is actually one of my models that I trade, right? I expected price to come and grab all of this liquidity, right? And then give me a good trade. And my other block also even had an imbalance. So that makes it a very, very reliable trade. And then I targeted this high as my swing high, right? So in my last video, I showed you guys, I taught you guys this model, right? So if you haven't seen that video, I'm going to leave a link in the description, right? So you just check out the description. I'll take you to the video so you can watch how I took this trade, right? This is a very, very high probability strategy, right? So you wouldn't want to miss out on it. So let's look for an inefficient price action. So let me clean all of these things now. Let's look for an inefficient price action, right? All right, so this is one example here. So this is it. This is a BOS, right? Price moving downwards, and then here's another BOS, right? Now let's quickly examine this zone here. This is a BOS here as well. So this is a downtrend. This is a BOS here. So this is a perfect downtrend, right? Now look at what price did. When price took out this low here, so let me just label this as BOS. When price took out this BOS, look at what price did. Price corrected to this zone to fill up all this supply zone, right? To fill up this supply zone. And then price reacted from this breaker block here, right? Price reacted from this breaker block here, right? To give us a sell down. Now, likewise, this zone as well. When price took out this, price retraced, right? To this supply zone as well, right? And reacted from this other block. Price reacted from this big order block here, right? And gave us a good trade to the downside, right? Now, when price took out this one here, this BOS we have here as well, look at what price did. Price also retraced, right, up to this zone. Price retraced to this zone. This is a very good type B. This is type B. I believe some of my students understand what I mean by type B, right? Yeah, this is a very good type B, right? These are B and A, right? Sorry for digressing, right? If you haven't seen that video, I'll leave the link in the video. You understand what I just said. So this is a BOS, and you see price retrace to this other block here, before giving us another push to the downside. But then look at what happened. Look at what happened in this scenario, right? After price broke down this zone, after this BOS, price failed to come back to this zone, right? And then look at what price started doing. Price started moving down impulsively, right? Without coming to fill up this zone. So that automatically make this whole zone you see here an inefficiency. So this makes this whole zone here price inefficiency. So what do you expect price to do? You expect price to at least come into this zone and fill up to 50% of this zone, right? You expect price to come to this zone from our lower low here to our lower high here, right? And then you expect price to at least come to this middle line here, right? You expect price to at least tap this other side, right? Tap both sides of this. So that price can be balanced. And look at what price did. Look at what price eventually did. Look at what price eventually did. Price came all the way, all the way. You can see that. Price came all the way to this other block that was responsible. This was the last OB, right? Responsible for the push down. Look how price did. Price came all the way, tapped into that other block and gave us a good sell, right? So if you understood price inefficiency before now, and you actually map out this zone as an area where price needs to correct, you would have caught a good trade from this zone using this zone, this high here as your stop loss, and you would have, sold GBP, right? And one thing you need to understand is whenever price fill up an inefficiency, right? Whenever price fill up an inefficiency, it's going to massively sell down. It's going to massively sell because this is a perfect downtrend, right? Because if you look at this is a perfect downtrend. This is GBP selling really hard, right? You can see what price has been creating series of BOS here, right? So this is actually a very serious downtrend by GBP, right? So what do you expect now? You expect price to, sell all the way down at least, to give us a very, very good trade. So let's say we actually place our trade from here. We sold this zone here. Let's say we sold this zone here, right? And then we target this low right here. We target this low here. Yes, we target this low here, right? Because, yeah, we target this low here. And that would have given us a good trade. Now, do you know why we target this low? Now, I believe you should know by now because this is it, right? This was the break of structure, right? Price started moving to the upside, this is a BOS, right? This is a BOS. Price took out this zone. And it failed to actually retrace properly to our demand zone, right? This is our lower low, right? This is our lower low here. This is our lower low, and this is our higher low and this is our higher high, right? So you see that price failed to properly come down to within this demand zone. So we at least expect GBP to, retrace to maybe this other block here or at least 50% of this zone. So that would have given us a very, very good trade. right? Give us a very, very good trade. So guys, this is how you actually trade efficient and inefficient price action, right? So whenever you see your strategy playing out, ensure that the market condition is efficient, right? Else you're going to get stop loss, and that even if your strategy is correct, even if you meet your trading requirement, you're still going to get a stop loss because of an inefficient price action, right? So, guys, if you found value in this video so far, please do not leave this channel without subscribing. Make sure you click on the subscribe button and also click on the like button, right? Now, in the comment section, I'm going to leave a quiz just to test your understanding of what has been taught here. Ensure you attempt that quiz, right? So I'm going to just show us now how to use the Fibonacci tool quickly, right? The Fibonacci tool. So let's say we have a range like this. We have a range. This is a swing, right? These are these are low, and then this is our high. So whenever this happens, we are going to use our fib to measure from the high that was broken to the low, right? And then the area we want to buy this market from now is when price retrace to this green area, right? Is until price get to this green area before we look for a trade, right? So that means maybe there's an order block here or an imbalance here. We can decide to take a trade from here, right? So if price is within this ask zone, we are not taking that trade, right? We're just going to wait for price to get to this green area and then we take a trade. Likewise, in a sell scenario, right? Let's say we have a sell scenario this way, we have price selling down this way, right? We are also not going to take any trade until, let's say this is our, right? Let's say this is our new swing, right? This is our new swing. Here is our break. Here's our break of structure. And here is our lower high, right? Our lower high and our lower low. So then we're going to use our fib to measure from here to the from our lower low, from our lower high to the lower low that was broken, right? And then we expect price to, retrace to this green area, either to an order block here or an imbalance here, and then we take our trade, and then boom, right? So that means we'll be taking our trade from somewhere here, and then we'll place our stop loss above this high, right? And then we target this low, right? And also we'll place our buy position, we'll place our stop loss below this low here, and then we target this new high that was created as our stop loss, right? Just this way, right? This is how we trade using the Fibonacci tool. This is how you use the Fibonacci tool to get the discount and the premium zone. So it means this green area here is your discount zone, right? And this ash area is your premium zone. So if price is within this ash area, price is too expensive for you to buy, right? It's too expensive. You're just going to wait until it gets to a discount zone here. That is when you are going to be looking to take a trade, right? So this is how you trade, and make sure that when you're using this Fibonacci tool, make sure that it is an efficient market condition, right? So guys, we've come to the end of today's class. See you in the next class. And also don't fail to attempt the quiz in the comment section. Peace.